Hi, welcome to the Market Alert for Friday, the 11th of October 2024. So, stagflation signal stalls stock, sparks gold, gains a weaker jobs data and hotter inflation data. Not what Powell and his pals want to see. No, not after reducing and cutting rates by 50 basis points, which I mentioned in yesterday's alert. US stocks finished with mild losses after choppy session, as participants digested the jobless claims and Fed speak. And that seems to be the theme there. Markets chop to mixed data and hawkish. Bostic, he was out yesterday. Well, that's good. You reduce rates by 50 basis points, and then a fellow member of the board comes out and starts talking about being hawkish and increasing rates. It'll be a while before rates are reduced, that's for certain. Consumer prices surged to new record high, and initial jobless claims exploded to 13-month high last week. And jump in jobless claims reignites recession risk. We're already in a recession, they're just not admitting it. They changed the goalposts on how they actually calculate it. So the numbers came out yesterday, and you can see that they were all the same as previous, actually. Well, 2.4 to 2.5, but it was forecast at 2.3. And then the jobless claims below this, 258,000. So again, that's why it created the choppiness in the markets, because they didn't know what to do with both sets of news, to be honest. I think both of them caught the market by surprise. Quick look at what economic news data we've got today. We've got GDP for the UK, doesn't really do a lot for the markets. Core PPI is going to be an interesting one after the inflation numbers yesterday. And then we've got prelim UOM and consumer sentiment and inflation expectations, both inflationary as well. So these four really are the ones the market will be looking out for today. Right, so let's have a look at yesterday's market action and kick off with the Dow. So yesterday, despite the numbers, the market more or less put in an inside bar in the Dow. I mean, this is a bit odd, isn't it? You know, the day before there's no economic news and the market plows ahead with 500 plus. And then yesterday it didn't. Now, did they know ahead of time that they were going to be bad? Because they ran the market up so they can bring it back during today. It's an interesting picture here that we've got. So you can see the choppiness for yesterday. We obviously had the move up the day before yesterday. But overnight the market's looking a bit weakish. If it breaks the DP, then there's a good chance the S1 and the low could be tested. Certainly doesn't know what to do with itself at the moment, and looking at the daily chart you can see the uncertainty yesterday as well. A lot of volume, more or less the same as the previous day, but the market made no progress in moving higher. In the German DAX, similar picture actually. Market treading water, volume higher than the previous day, and again less in range, so there's some selling around, and that's shown overnight as well. In the 30-minute chart, just looking at that overnight picture, we're down to the DP, not too dissimilar from the Dow, and we're below the 50 and the 20 bar moving average at the moment. Meanwhile, yesterday the market sold off and then managed to rally back to the high of Wednesday, and then we had the CPI numbers and the weekly unemployment numbers, and then the market sort of sold off and then managed to clamber back overnight there. In the S&P 500, did we get a new all-time high yesterday? Let's just have a quick look. 9.5, no we didn't, so we'll remove that. So again, an inside bar, and again higher than the previous day's volume with less traction because of the news, and overnight some weakness there. So if we look at the 30-minute chart overnight, again coming down to the DP and testing it, which is good news for the Dow. It might help support it, and also other markets as well. So the S&P, or setting the precedent there at the moment that prices are finding support at the DP. However, just look at that choppiness in the S&P yesterday. That's a choppy market, that is, compared to the previous day where the market just moved up and created a new all-time high. So it's got a bit to do to make a new all-time high. It's certainly got a hold at the DP and the 50 EMA, which it's done so far. In the FT100, nothing to report here. This market is just absolutely sideways. As you can see, they're treading water. Don't know what it's waiting for, but let's see if the GDP numbers moved the market at 7 a.m. this morning. 30-minute chart, we saw prices moving lower in the first part of the session. Then we had the CPI numbers and then prices moving back, sitting on the DP there, as you can see overnight as well. In the US dollar yesterday, the market moving up on the reaction to the CPI numbers and Bostic's hawkish comments. However, this returned to the downside, red bar. However, overnight we've got a bit of green there, so maybe the market believes that the cut-in rates could be reversed. Certainly wouldn't be by half a basis point, but then it's the day after the news, isn't it? And it'll all be forgotten as we go into the weekend, because dominating the news will be the war again, as it is every Saturday morning at the moment when you look at these online news websites, particularly Sky News. I can't remember how many Saturdays I've looked and seen a resumption of the war as the headline. It isn't during the week. Keep the markets up, don't distract anybody. But the weekend, it all seems to revert back to the war situation. Right, let's have a look at the silver price and gold price. So yesterday we saw the market finding support based upon these numbers. I don't know why. Silver is being allowed to move higher because if there is a prospect of the rates being reversed and being moved back to the upside, normally you would see silver being sold off, and it's not. So again, this is very interesting in its move to the upside at the moment. In fact, it's starting to show some sort of strength here. 30-minute chart, again, you can see the reaction there, or initial reaction, and then it's still up overnight as well, taking out yesterday's high. The same for gold as well, taking out yesterday's high on the overnight. Like I say, the focus is going to be switching back to the war scenario that we've got. And there's the 30-minute of gold as well. It spiked down and whoop, off we go, back to the upside. So have a look at the gold-silver ratio. And silver moving and holding yesterday. Certainly saw the gold-silver ratio move lower. It was just starting to tick back to the upside, so maybe it will move back to the upside. Who knows? We'll just have to wait and see. Right, a quick look at yesterday's trades in the 2-minute DAX. So in the pre-market, prices were treading water. There was a lot of activity around here, as you can see. Not too dissimilar from the daily pattern in the FT100, stuck in a sideways range. Market opened, spiked up. We then had a potential buy signal that failed to continue to the upside. And then we had a short that was filled and then moved down. And you'll see trailing the stop there to take the profits off the table. Got out too soon, but it recouped the losses on the first trade there. And then prices went down and tested the DP, which would have been the wiser move there. But the fact that it closed back above the psychological level and the 5-bar moving average there was key enough there to bank the profits. The market then just traded sideways, waiting for those CPI numbers, which came out at 1:30, which you see the market's reaction there. Prices back above the 200 MA though. Immediately following this, they get retested again, and then the market becomes sideways, and the 200 MA acting like a magnet until the Dow opens, and then we see the market move lower once more down to the DP, through the DP, and then find support at the psychological level before it is brought back. Prices then trade sideways and sit on the DP, but then manage to break this as well. And then we go into the evening session there. So no trades in the afternoon, just a choppy session, and prices just sideways as we've seen. So have a quick look overnight, see what they're doing. And here you can see they're already below the close and the DP, and treading water. We've got some green inside of these two red bars here, so there's some buying around at the moment for the 2-minute chart. But saying that, the market has broken the support to the left there. So that's where we are, following the CPI and the weekly unemployment numbers as we head into the final session of the week. So let's see what happens going forward today. And like I say, this is the last market overview for the week. So have a great weekend. And as ever, thanks for watching. See you in the next one.